Ladies and gentlemen, people of the internet, welcome back to yet another episode of Crypto Over Coffee. I hope you're doing well today. And if you're new here, every Saturday we start off the weekend right by breaking down the latest news and the hottest topics in the world of technology and cryptocurrency whilst drinking a cup of delicious coffee. Now, that being said, in today's episode, we're talking about the whole stock market drama and what it means for Bitcoin and crypto, as well as some cold storage information, our usual 404 Logic Not Found segment, and more. So make sure you stick around for all the updates we've got on the books today. Now, as we always do, let's kick it off with questions from you, the awesome folks who watch my channel. If you want one of your questions answered, make sure you do leave them in the comments down below. Tweet me at Hashoshi4 or leave them in the Hashoshi Discord, which will be, of course, linked down below. Now, if you would be so inclined, also please do subscribe to the channel and hit the little bell notification button next to the subscribe button so you get a heads up whenever I post new stuff here on the channel. And of course, it is much appreciated. So let's dive into this first question. And the first question is from Sturbu Marian. I'm sorry if I butchered your name. I tend to do that on this channel for some reason. So in my last video, we talked about replace by fee, or what happened with the whole Bitcoin double spend, which actually really never happened in the first place. So this person asks, can you do a quick explanation of how child pays for parent works, which is CPFP for short, which is another way for someone to sort of speed up, in effect, a Bitcoin transaction that gets stuck. So replace by fee, for someone who might not have watched the last video, is when you send a follow-up transaction to one that you've already sent with, say, the minimum fee. It'll maybe take a couple days to get validated, for example. You can send a second transaction with higher fees as long as it's spending the same Bitcoin, right? It's spending the same coins. You send a transaction with higher fees because you realize that miners are going to prioritize a higher fee transaction. That's the idea of replace by fee. You're replacing the transaction with a higher fee one. Now, child pays for parent is slightly different. And a great example of this is, let's just say you send me some Bitcoin. Let's say you send me half a Bitcoin. I'm going to then want to obviously take that Bitcoin that you sent me, and I have it. Probably I'll have the transaction there pending that hasn't been validated, or maybe it doesn't have confirmations yet. What I want to do is then I want to, as the person receiving the Bitcoin, send that over to, say, my cold storage. What I would do in a child pays for parent environment is I would send a transaction with, juice it up and give it a good fee so that it gets incentivized to be thrown into a block by miners. In order to make that transaction valid, however, they would have to also include the transaction that you sent to me to send that Bitcoin in the first place. So your transaction in general would be sort of the parent. My child would be my child. My transaction would be the child because I'm sending Bitcoin that you've previously sent to me. And in this case, child pays for parent because I send a really high fee transaction, which incentivizes miners to validate it in their block and subsequently to make that transaction valid so they can claim that reward that I'm basically throwing up. They have to validate your low fee transaction. So hopefully that makes sense. Basically, the person who is receiving a transaction tries to send a transaction on those same Bitcoin outputs, right? Ultimately, that drags that parent transaction through in a block. And this is more about how miners react and the economic effects of mining, how they are sort of trying to find the highest fee transactions that make this work. So I know semi-long-winded answer, but I hope it gives enough detail to understand without giving too much complexity that it's confusing. So hopefully let me know in the comments if something doesn't make sense. Now, the second question of the day is from Leander. Thanks for the great content. Thank you so much. Should Cardano have another dev core team besides IOHK in order to achieve total decentralization? Now, I'm going to answer this question not just in relation to IOHK and to the Cardano project, because I think this is something that a lot of people might be curious about with their favorite project. How can you be decentralized if there's a core development foundation that runs everything? And that is a great point. So here are my thoughts. I think that ultimately all projects' goal should be to have as many community open source developers, so people that were never involved in the foundation from the very beginning, to be contributing to the actual protocol development process. So projects like Cardano have started to move in that direction with their Voltaire development era, which is all about governance and carrying the network forward in terms of creating almost like a digital democracy for how the protocol is managed from then on. And that's designed to pull IOHK out of this governance role, if you will. A lot of other projects are doing the same thing, but I also want you to think about how human beings work in general, which sort of runs counter to the whole idea of having non-central governance. When people are working towards a common goal, which in this case and in many cases is they want the protocol to be as good and as great and as effective as possible at what it does and what it's supposed to do. When you have a protocol incentive like that, people are naturally going to create an organization, right? You're going to create maybe a Zoom call between all the open source developers. You're going to say, let's form a foundation, a coalition to organize efforts on these things. It's really hard to build a truly 100% decentralized community around a project. You can do your absolute best to cultivate that environment, but it'll never be 100%. Now, this is my opinion. Some people may think it is possible, but if you look at the way human beings currently behave today in this modern era, decentralization in totality is not an attainable goal. So what I think really people need to do is find ways to create incentive, or to eliminate incentive loopholes for there to be large-scale collusion. It shouldn't be to the benefit of large groups to own large swaths of responsibility within a protocol. And that is the thing that you really have to do, is just prevent the negative outcomes of over-centralization rather than striving for 100% decentralization, which I don't think you can ever achieve. So the short answer is, should there be another dev core team? Probably, and there probably will be, but as soon as you say the word core team, that also implies that there is some element of centralization because they are handling core parts or core elements of the protocol. So little things like that make a huge difference, but at the same time, I think people should be realistic about what they expect from a decentralized protocol. Thank you very much for your question. Very philosophical, that answer. So thanks very much. Now, the next question is actually one that I got on Twitter, and it's a very interesting one because this is from Don Crypto Insight asking about how an Ethereum VM, virtual machine, EVM, running in the context of Cardano can be faster than the native Ethereum virtual machine in Ethereum. And so I know this has been circulating around a lot, the KEVM as it's called, which is just a K framework version of the Ethereum virtual machine. And the K framework basically being a way that you can take a virtual machine spec, make it a formally verified specification in and of itself, make it more predictable, make it safer. And a lot of people say, oh, well, it's also faster. Now, this is my take on it. I at least don't see right now how the KEVM within Cardano, similar to a lot of the other EVM ports that you see for other projects that allow you to port ERC20 contracts over, for example, I don't see how it makes it faster in terms of operations beyond a handful of maybe base level performance optimizations that you could make. Where I do see a huge benefit in moving to the K framework for the KEVM is that you do have now a formally verified, safe and predictable way of operating the Ethereum virtual machine, which changes the way you interact with it and the way that you can rely on it when you're writing code. I think that's the main difference. And so I wouldn't bet a large proportion on the actual KEVM itself to be a huge speed boost, but rather the Cardano network itself that does the transaction validation part and actually executes on the actual fundamental components of a smart contract program to be what really speeds things up the most. And so I think that that's something to watch out for. Let's see when some of the new Solidity focused programs start getting published onto the Cardano blockchain. And of course, for that, the world is waiting with bated breath for Goguen, which I hope comes very soon. Now is the opportunity. So with that, folks, let's go ahead and dive into the main news section of the video. And just a friendly reminder, please be aware of the scammers in the comments that are posing as me. If the comment does not have the name highlighted like you see here on the screen, it isn't me. You can report them or just ignore them. I'm trying to delete as many as I can, so please bear with me. Also, for those who are new here every week in partnership with the folks at Cobo, they make the awesome Cobo Vault wallet if you're not aware. I'm giving away a Cobo Tablet steel seed phrase backup device in every episode from here on out of Crypto Over Coffee. Now, all you have to do to enter the random draw is comment on the video, and I'll pick a winner each week. So just for transparency, the product is only available in the US, Canada, and Europe. So if you win and you're from another region, I'll just send you some Bitcoin instead. And so the winner of last week's giveaway for the Cobo is here on the screen. You see the random draw. So big congratulations to you. And of course, I will be in touch. Now, this week, it's been, needless to say, a complete roller coaster ride with a full-on battle unfolding between retail investors trading en masse on the Reddit Wall Street Bets subreddit, and then massive hedge funds, and I guess the whole Wall Street establishment, if you will. So for anyone that hasn't been following this whole thing, here it is in essence. Basically, the Wall Street Bets subreddit started a literal viral movement to propel GameStop, a stock whose valuation by traditional metrics is albeit poor, to hundreds of % growth in a matter of days. Now, this movement of the stock squeezed out very large shorts by large hedge funds, which prompted a big crybaby response from those hedge funds claiming market manipulation and essentially asking for a bailout or someone to just do something to fix it. Now, if we lived in a world that was honest, every person on earth would tell the hedge funds to go kick rocks because they, along with their Wall Street buddies, have manipulated the markets to their own gain for decades without really all that much disruption. Now, this whole situation came to a frothy head when Robinhood, the stock trading app that was supposedly founded to democratize trading, shut down access to the plethora of stocks that retail investors were pumping money into, like GameStop, AMC, and Nokia. Now, these apps, and really specifically Robinhood, allowed investors to liquidate their positions, but of course not to buy anymore. This prompted due anger amongst the masses, but it didn't stop several other brokerage services from doing the same to stop people from continuing their short squeeze on these hedge funds through these stocks. Of course, throughout this situation, the need for decentralized technologies became a hot button topic of conversation, and naturally, Bitcoin became the center of that conversation in the first place. In fact, the events of this week resulted in massive internet personalities and public figures changing their Twitter bios to one simple word, and that word was Bitcoin as a hashtag. People like Elon Musk and Mr. Beast, arguably the largest YouTuber on earth, participated in this very thing. So unsurprisingly, Bitcoin shot up 20% as a result of this supposed vote of confidence from these folks, leaving us back close to the 40K mark at the time of recording. Of course, at the rate that the markets move, this video will be outdated price-wise before I even pull the clip onto my computer. So just bear that in mind. We're probably in a much different place here as we watch. Now, ladies and gentlemen, it is time for 404 Logic Not Found. And for those of you who are as of yet uninitiated in this little firecracker of a segment, basically I highlight notable tech-related fails or otherwise stupid moves in the world that just need to get some attention. And speaking of attention, if you want to help this video get some attention from the YouTube algorithm robots or from the podcast platforms themselves, please do like and get subscribed and follow whatever platform you're on, because it helps those robots tell everyone else that this thing exists and that people might also enjoy the content. So thank you so much in advance for that. Now, I'm doing 404 Logic Not Found so early in this episode because I want the whole stock market fiasco to be fresh in your mind for this one, because it is a clear as day resolution that Wall Street has always been able to freely profit to a great extent by dumping on retail investors, most of whom are not in a category that you could say are wealthy. This presents a clear and obvious flaw in our system, both in the United States and abroad, but especially here in the US. The GameStop example from today and from this week is a pure and simple event where retail investors banded together to squeeze out hedge funds who were shorting the stock, and they did this by valuing the GameStop stock highly despite the valuation that Wall Street has given it based on their methods. In effect, these retail investors participated in free market activity, which should be what we have, but these hedge funds, and because these hedge funds, and most of Wall Street for that matter, seem to only accept market manipulation when it's in their own favor, ignored the fact that the larger group of people, can value a stock with whatever metrics that they want in a free market. And they went straight to the regulators and market makers like Robinhood to fix their boo-boo and say, hey, this can't be allowed because we're losing money. Worse yet, Robinhood, a company founded on the idea that everyone should have access to stock trading, obliged in overtly halting trading on a handful of stocks, along with a bunch of other stock trading platforms that followed suit. And I'm not implying that someone told them to do so, but they were complicit in making it impossible for retail investors to kind of decide what the market value of a stock is based on their demand. And this is evidence, if it were ever more obvious, that the entire mainstream market system is rife with manipulation and one-sided rules that seem to only benefit those who are inside the fold. To the Wall Streeters and accredited investors who think it's okay to get a pre-IPO allocation of the next hot stock at a price far below retail, then wait till the retail influx pumps the stock, and then dump the stock, that same stock, on retail investors once you've capped your profit, please tell me how that's not manipulation and how that's fair. How about when hedge funds and other large entities coordinate to price an asset as they see it to be based on their metrics, not how the market would otherwise price it naturally? And Robinhood and any other stock trading platform who limited access to GameStop, AMC, Nokia, etc., to prevent retail investors from executing their right to purchase a stock using any valuation method that they want, really, and that is allowable within the market itself. This is not free market behavior, and to say 404 logic not found does not even do justice to the fact that the poisonous evolution of this one-sided market must come to a halt. There are rumors that the SEC is investigating, and there have been letters issued from congressional lawmakers about the same. But I'm not going to hold my breath for the tippy top of Wall Street, who always seem to get bailed out, to actually be held accountable. And the time has come to decide, is this a free market or is this a market of free profit for Wall Street? All I know is that the average person did not get a bailout in 2008. Banks and Wall Street did. And it would be the ultimate cherry on top if hedge funds were able to get a bailout now, because one single time retail investors banded together to squeeze them out of poorly hedged shorts. The irony of that whole situation is not lost on me, so I will say it again, 404, logic not found. Now, I know today's episode has been a bit heavy in terms of doom and gloom about the events of the last few days, but let's turn now to something pretty darn cool that I've been playing with for a little while, and I wanted to show you in terms of cold storage for Bitcoin. Now, one of the bigger challenges these days for secure hardware is user experience, making it easy to secure crypto and then also use it day to day or when you even want to. Tons of people have issues with this. So Tangem, who make the crypto storage cards that I've showed on the channel before, just came out with this new product, which is based on the same architecture, which is intended to be a simple and user-friendly way to secure your Bitcoin specifically. So this is the Tangem Twin, and it's composed of two metal Bitcoin compatible cards with onboard security chips, which perform the crypto operations for signing. Now, these cards communicate via NFC with a well-designed app on iPhone and Android, which makes managing your crypto transactions super, super simple. And then the concern about drive-by scanning, where a hacker walks by you and scans your NFC, it's easily blocked by customizable scan times and custom passcodes. However, what makes these wallets so appealing to someone looking for a good day-to-day Bitcoin security mechanism is that there are two cards that are part of a one-of-two multi-sig scheme. And what this means is that if you lose one card, the other can spend the Bitcoin that you've put on the other. And now it's a great way to keep a backup or redundancy without the need for a seed phrase written down on a piece of paper. So you can either use this to have two separate complete backups, storing one card in one location and one in another, or you can carry one and leave one in a safe at home, always knowing that you have a backup in case one fails or you lose it, etc. Now, there are small ways that I would improve this product, but the main one would be to provide the option for customer-provided entropy for those who want full trust that their key preloaded on the card is derived from entropy that they at least control some of. That one thing being said, the Tangem Twin, this product, is a pretty appealing mechanism for daily access of Bitcoin without the added stress of a seed phrase or the poor UX that you're usually experiencing with hardware. So check it out using the link in the description down below if you're interested. Of course, I get nothing out of it. I just think it's really interesting and you should check it out. Now, I tend not to comment too much on price predictions, but I've been doing so more often lately because I feel like while you can't predict what's going to happen, you can use trends and history and statistics to make macro predictions about where the market as a whole might end up going. Now, it's really hard to pick specific numbers, but one such metric that I've found generally pointing to bullish moves is the presence of stablecoins or fiat-pegged crypto sitting on exchanges in large volumes. When stablecoins are on exchanges, it often presents fiat value on the sidelines, waiting and just sitting there, biding their time for a buy-in opportunity in crypto. Now, when that buy-in happens from those stablecoins, it drives prices up in relatively voracious fashion because you have all these stablecoins ready to go in. In fact, since the middle of the year in 2020, stablecoin influx to exchanges has largely trended upwards in terms of transaction volume, and January 2021 has seen some days of significant increase in the same. This past week, we've seen days of significant volume of stablecoins entering exchanges, and that was evidence in the huge run-up after Elon Musk threw the Bitcoin hashtag into the bio on Twitter. Buying happened really fast, and stablecoins being on the sidelines probably helped. So this is a metric that I'll be watching as we wait for what everyone hopes is another big bullish trend upwards as we move through 2021. Now, another interesting or cool data trend that I've been following is some battles heating up. And one of those battles that I'm really interested in would be Uniswap and SushiSwap, two trendy decentralized exchange and swap protocols in the crypto space that lots of people are fans of. Now, for a long time, Uniswap has dominated the market for ERC20 token exchange and swap. And despite the early drama, SushiSwap did threaten the dominance of Uniswap early on. The whole rug pull fiasco and drama around the core dev of SushiSwap, that is, really kind of threw a wrench in the whole engine of the project, but a rework of the core service and a merger with one DeFi juggernaut by the name of Yearn, which many of you have probably heard of, has catapulted SushiSwap back into the game of taking market share from Uniswap. Now, this is why I find this type of competition so bullish. Competition will only push Uniswap and SushiSwap and competitors that might not have even been invented yet to make these products better. And better products usually means better for the user. The more decentralized exchange options there are, the better they are. And the cheaper they are to access and use, the better. And Uniswap and its competitors have largely been responsible for the resurgence of a lot of altcoins that would have otherwise died because they've been beholden to centralized exchange listings and having to pay for those things and pander to exchanges to do it. Now access is out there. That's a good thing overall for a lot of these projects that are boots on the ground trying to build something cool. I'm hoping for a hard-fought battle because it means better products. So watch out for market share metrics like transaction volume, value transacted in total, etc. when using these protocols, and let the best protocol win. Another very apt and exciting story that I've read now a couple times are the reports coming out of Japan that two companies, SBI and SMFG, are supposedly working together to create the first fully blockchain-based stock exchange where assets will be digitally issued and owned. This would be a massive piece of news if it comes to fruition. Right now it's rumors, but they're pretty reasonably strong rumors. But it wouldn't be big only because it would be a competitor to the main TSE or Tokyo Stock Exchange, but it would also be a counterpoint to the traditional way of running an exchange in the first place. I don't think that this would solve all the issues we've seen in the stock market recently with the whole GameStop fiasco, etc., but it's a start in the direction and the conversation of using blockchain technology, decentralized technologies, and digital asset ownership for the establishment financial instruments and markets that we're all used to, and the ones that desperately need an upgrade. So things like Wall Street, it's time for an upgrade of the tech that runs these things. The order books, the ledgers, all those things, they're built quite badly, to be quite honest with you, and I think this would make a big difference. Now with that, folks, that's going to do it for today's Crypto Over Coffee. Again, let me know in the comments below if there's a specific piece of news or a project that you're interested in that you want me to do some research on and cover in future episodes. And of course, I will leave a link to my top altcoin picks here on the screen for you to watch if you have time to stick around. But as always, thanks so much for watching. I wish you and your family a wonderful, wonderful weekend ahead. And until next time, cheers.